Good morning, everyone. I am Stephen Haas, Head of Credit Trading at AmeriVet Securities. Welcome to Talking Tuesdays. March's new issue calendar missed monthly expectations, while the U.S. Treasury curve saw rates move lower and a curve that was less inverted. We saw heavy secondary trading flows for the third month in a row that led to net client selling as spreads were mixed on mid-month volatility. The Fed was in play in March and executed a 25 basis point rate hike amidst the mini banking crisis, with regional banks taking the spotlight, along with key economic data, which pushed the markets to lower rates and volatile spreads. Prior to the mini banking crisis, a 50 basis point rate hike was being debated, but the banking crisis for Silicon Valley Bank, Signature Bank, Silvergate Bank, and Credit Suisse led the volatility and a coordinated plan of attack by the Fed, the FDIC, the U.S. Treasury Department, private capital, and the money center banks to stem the tide on a further run on the banks. For April, all eyes will remain on the banking sector, along with first quarter earnings and key data releases. For the moment, this mini banking crisis seems contained, as a rally into month end saw spreads in many sectors retrace the move wider and closed closer to unchanged and in some cases tighter on the month. April is expecting $100 billion of new deals and $15 billion for the first week. Great job by the AmeriVet Securities team in March, as we were co-managers on a $7 billion three-part deal for HSBC Holdings, a $3 billion two-part deal for Enbridge, a $1.5 billion Warner Media 3-year deal, a $400 million 10-year for Louisville Gas and Electric, a $400 million 10-year for Kentucky Utilities. I am Stephen Haas. Thank you for listening to Talking Tuesdays.